Hey everybody, good afternoon, good evening, good morning, wherever you are. Doc Severson is with you here. Today is Tuesday, the 6th of April, coming to you live on YouTube Live. And whether or not you're watching here with me today, or whether you're watching this through some kind of a replay, which is actually statistically probably more likely, want to welcome you to today's session. All right. Want to also, for those of you that are not 10X Tribe members, if you are just on YouTube, go ahead and hit the notification bell. If you want to be notified of these sessions, we're going to do these on a regular basis. So if you want to know when I'm broadcasting live and talking to you, go ahead and hit that bell and join me next time we do this. So welcome aboard. Today, we've got a fun little session. I don't think we're going to go past maybe 30 minutes or so. If that, pending your questions, of course, which we always take at the very end of this. So start queuing up your questions that you want me to cover at the end of today's material. All right, so let's get into it here today. What we want to do is talk about the 10X Tribe trading scans. So if you are on our platform, if you're one of our free or elite members, you're going to see these things pop up all the time, sometimes multiple times a day, sometimes once or twice. What are these scans? What do they mean? What are we supposed to do with them? All right, so we're going to get into that today. Thanks very much, Willis. Appreciate you showing up today. So the first one is the one that you probably see the most of. And what it's called is very simply a dividend-paying, affordable stock, which is in an uptrend. So these are meant to be stocks which pay at least a minor dividend, which is not that important these days, given that a lot of, the interest rates are so low that nobody's really paying much of a dividend. And actually, we don't want too much of a dividend. I'll talk about that in just a minute here. So I want something that's in a longer time frame uptrend. So I want something that's generally trending higher and maybe is just undergoing a short little pullback. And I'll show you how we scan for that in a minute when we get into that. All right, so this obviously would be a good stock to be able to find, something that's in a pullback, so you're not chasing after it up at the highs, it's pulling back. So there's several different ways that we can trade against it, whether you just want to buy the stock or you're more elegantly trying to trade something using options. Here's what the platform alert looks like. So these are automated alerts. It's not Mr. Charles out there, like glued to his terminal all day long, pumping them out. So this is an example of like Schlumberger was added to this scan. And in fact, this came today. All right, so we're going to talk about the scan. We're going to talk about what it means, and then we're going to talk about how to trade it. So the scan itself, I'm going to bring up the TD Ameritrade Thinkorswim platform. This is where we generate the scans originally from, and I'm going to walk you through the logic of the scan. All right, the first thing that you want to do when you're setting up a scan, and if you're just joining us, welcome aboard. Welcome to our 10X Tribe coaching. Today I'm going to be going over 3 different types of signals that we fire into our platform on a daily basis. So even if you're a free member, you get these as well too. Now, the first thing I'm going to show you is we're going to scan in a limited stock watch list. There's thousands, there's 8,000 stocks that we could trade, give or take a few, right? You can't be an expert on all 8,000, but you can get pretty familiar with a couple hundred of them. And this is what we start with. We have boiled down the number of stocks that our universe of stocks that we will look at and trade is about 200. Give or take some, depending on what's happening in the market. So these are the biggest, baddest, most liquid stocks that are out there. So what we're going to do is we're going to start out by using them as sort of the beginning of the funnel, so to speak. So if we're going to funnel everything down to just a few that fall out of the bottom of this thing, we're going to start with this watch list going into the top of the funnel. All right, from there, the first thing that we want to do is we're going to look for a dividend yield. And the minimum of this is actually 0 because I really don't care that much. And I'm maximizing this. I don't want to see a dividend which is paying over 2%. Quite honestly, because if it's paying more than a 2% dividend, if you're paying more than a 10-year note on there, then more than likely it's a crappy stock which is in a downtrend and it's something that I don't want to own. So if somebody has to dangle a huge dividend in front of me just to be able to buy their stock, more than likely it's rolling around in the gutter. It's not doing well. The price performance is probably terrible. So I'm trying to think of the expression here, but it's don't get confused about what you're looking for. You're looking for capital gains. You're looking for something with good performance that has potential to continue to appreciate in price. Don't get locked in on the dividend, right? So don't get locked in on a 10% dividend, which is going to create opportunity cost if you could have made a lot more than 10% in a yearly basis on that stock. All right, that's the first one. The second one is I want to look for something that's at least $14 a share and no more than $50 a share. So this is kind of a sweet spot when it comes to option trades. Now we can give this a little bit, we can give and take some of these. I mean, some of these are, obviously I'd like to be able to trade something which is less than $50 because you start getting into these crazy $1,000 stocks and it's going to eat up a lot of your capital just to trade one contract of it. There's no point in that. There's plenty of stocks. In fact, out of this list of 200, we have 43 of them that meet that criteria. And out of 200, we have 77 that meet the yield criteria. All right, so you can see how this is kind of like driving down the funnel here. It's getting more and more narrow. Now next, actually I want to go to the very last one here, which is the simple moving average of 200 is less than or equal to the close. What this is that if we have our price performance up here, this is the price chart perhaps, we have the moving average, the 200-day moving average is below this. That's the 200. The 200-day moving average is not a trading signal, it's a filter. That's all it is, it's just a filter. I want the price to be on the positive side of the 200-day moving average. This is a very simple filter, it's used in scanning. It implies the mean of the price. It implies an uptrend, a longer-term uptrend, if the price is above the 200. Is it going to be exact? No, of course not. I mean, it's just a big way to slice and dice very quickly a lot of stocks and be able to look through this. So that's one filter that I use, and I got this idea from Larry Connors, who is from tradingmarkets.com. So Larry Connors does a lot of these types of scans. And the 200 isn't something that he uses all the time. And lastly, this is a little trick that I added myself. What I'm looking for is this one here is the moving average exponential 21 period is greater than the price. So if the price is doing this kind of thing over here, I'm going to have a 21 period moving average. Let's go with a different color here. 21 period moving average is going to be fairly responsive. So it's going to be doing something like this. But if the price starts to turn down, what I'm going to have is that moving average is going to be above the price. So this is what I want to see, is something in a longer term trend to the upside, but pulling back, and that's going to be noticed by that 21 period moving average. The price is going to be below that. So it's a little trick that I use. And then if we do all of this scanning, we can see that we have actually several of these coming out. Now, what's cool about Thinkorswim TD Ameritrade is that we can set up a dynamic watch list which will rise and fall depending on what's in that scan. So we can see that this dynamic watch list will append new candidates to this as they fall into the scan, or it will take away some that no longer meet the criteria. So I don't have to go out there and scan this every day or every week or whatever, I can even have this emailed to me. And this is the results of the scan. This is the interrupt driven. When we have a new result from the scan, it shows up in the platform. All right, so just taking a quick look at this, at some of these, so we can see some of these, and this is what I encourage you to do as well too. Now, this is kind of a longer term downtrend. This is actually a weekly downtrend. This is something like Apache, and a lot of the energy stocks look somewhat like this. So they've had good relative short-term performance, but really poor longer-term performance. And what I'd probably want to see is, before I jump on board this thing, I want to see this longer-term trend line start to get broken to the upside and really start to rip to the upside. I really don't have any particular need to go chasing the bottom picking on these things. So a lot of these will look like this. Now, here's a better example of something that has turned around. This is Bed Bath & Beyond. Not that I would go after retailers these days, but regardless, it's had good short-term performance. It's in a pullback. Here is Halliburton. This is another energy-related type of company. And again, longer term, it's still in kind of a downtrend, even though it's above the 200. So I'd probably avoid this one. Occidental, all of these energy stocks are going to look like this. Schlumberger, same thing. Now here's TBT, which is interesting because this is the inverse ultra short bond ETF. And so, of course, this one, bonds have been going up in price. And recently, because the interest rates have started to climb, this almost is related to the interest rates. So we could see this one at some point if you think that this is going to be longer term, right? So this one could actually start heading higher. Although myself, I would never trade or hold over any length of time any kind of ETF that is marked to market like this. So ultra short or any like VXX or anything like that, bad idea to hold these things long term. Okay, so if you have any questions, let me know as you go through this. But that is our first scan. So again, we see a lot of these that show up. And Schlumberger was one that showed up this morning. So you can see this one. And I can put on the 21 period moving average, but you can kind of get the idea here is that it's pulling back short term. Now, how do we trade something like this? Well, there's a number of ways you can trade it. You can either just buy the stock, or we tend to do things a little differently here. We tend to use options to get a better edge to our entry. So if I were to look at this, I would say support is probably somewhere around the $25 level of this. So I can potentially do what's called a cash secured put. I can go out maybe 45 days and look to see whether or not I can sell a trade here. And so I'd be selling what's called a cash secured put. So what we'd look to do is on this, let's just say we got filled for $65 a contract. What we'd have to do is we'd have to put up $2,500 against that because we are committing to buy the stock down at 25. And I'm going to do some quick math here. That looks like it is. That is a 2.6% return. Remember what I said about, chasing yield? For the next 45 days, I can make a 2.6% return on this trade for doing basically nothing. So here's how this works, is if I set up this trade into the May expiration, what I'm doing is I'm saying, all right, I'd be a willing buyer if by the third week in May, the price is at or below $25 a share. Now, I'm not saying this for Schlumberger. I have no interest in buying Schlumberger, but just say that I was interested in it, okay? Does that make sense? I'm not recommending this, but I'm just giving this as an example if I was interested in buying Schlumberger. Got to be specific these days, right? So I've collected $65 of this, and my cost basis is dropped by 0.65 as well, too. So my actual cost basis is down here at about $24.35. So I'm basically getting paid to buy the pullback. So instead of just taking my money and just saying, okay, I want to get into Schlumberger, If the price goes higher, what happens? Well, I keep that $65 that I got for a contract, make my 2.6%, and by the third week in May, obligations released, I can go on and do it again. If the price goes sideways, and this is the important thing here, is that if you buy stock and the price goes sideways, you don't make any money. That's opportunity cost. Even if the price goes lower, down to about $25, if it drops about $2.50 down to $25, I still, as long as it's above $25 a share, I don't have to buy it. But it's only if it comes down to 25 or lower do I get assigned by expiration. Remember, that's what you wanted in the first place. You wanted to buy that stock. So I only do this trade, this strategy on stocks that I'm seriously trying to buy. Schlumberger, not so much right now. I'd like to see a little bit more established uptrend, even though this may be a good opportunity. Okay, so that's a cash secured put. Also, what we could do is we could do some form of put credit spread, so without putting up as much capital. So that trade, the cash secured put, I'd have to put up per contract $2,500 because I'm obligating myself to buy 100 shares of the stock. But I could trade something much more efficiently if I wanted to. By doing something like this, I could do a $2.50 wide spread, and I can limit my risk on this to about $125 or so. So all kinds of different ways to trade directionally or sort of semi-directionally, if you will, and give yourself a lot of different ways that you can win the trade. Of course, you could always just buy the call option over here, but we just don't do that. That is a very, very aggressive, very risky way to try to make money. And that's unfortunately the first way that most people learn how to trade options is just to use them as a proxy for the stock. And it can work out spectacularly, or you can lose every penny of the call option that you buy. And usually what happens, it's a combination of both, because most people use way too much capital per trade and don't have an exit plan in place, which is why we focus on that so much at ReadySetTrade. All right, so that's our first scan. Don't want to belabor the point. If you have any questions about any specific scan, let me know what that is, and we'll cover that at the end when we break for questions. Okay, here's number 2. It's called the Connors Crash. Again, tip of the hat to Larry Connors, who this is featured. He wrote an ebook, I think it was 2 to 3 years ago. It's called Buy the Fear, Sell the Greed, or I forget exactly what it is, but maybe one of you remembers what it is. Buy the Fear, Sell the Greed, maybe. Okay, so it's Connors Crash, and this scan identifies stocks that have come too far too fast. So everybody knows a whole bunch of stocks that have gone too far too fast. Well, we're going back in time in this one. All right, so you're seeing a stock price that just goes completely ripping exponential uptrend like this. This creates a bearish setup. Okay, so platform alert looks like something like this. In this case, workhorse. We don't see that many of these. Very infrequent results, as you might imagine, considering the uptrend that we've been under for the past, 13 years? So let's see the results of that workhorse signal. So here's the workhorse signal, and this red arrow is actually the day that it showed up. So this showed up in the middle of the day, super strong signal up here, and faded by the end of the day. Now, in our platform, I give a little video that shows the exact criteria that you're supposed to wait on. Just because you get the signal is almost like the first half of the criteria, and then you want to see a gap higher the next day, those kind of things. But the signal did fire on this day. Now, notice that it did take a couple of weeks before this thing finally crumpled under its own weight. It's pretty common. Right? What you'll find is that bearish setups are just not very linear. What you find is that bullish setups are kind of like this, right? They run consolidation. breakout consolidation. This is a larger time frame consolidation in here. And everything just sort of fits together nicely. Everything makes sense and everything's very linear. When markets go in the opposite direction, then nothing makes sense anymore. And so you have to be very contrarian. So it is difficult to step in front of something like this. You feel like you're standing in front of the freight train bearing down on you, holding out your hand saying, "Stop, I order you to stop." It doesn't feel very comfortable. So this is why it's important that you use limited risk strategies for these. Limited risk strategies are very, very important, right? You don't want to just short the stock. You don't want to do something like that because you're opening yourself to unlimited risk should you do so. So how do you trade something like that? Well, let's bring this down again as well, okay? If we were to, now Workhorse is already dumped from this point, but let's say that Schlumberger was showing a signal. Now, what I would want to do is I could just simply buy an out of the money put. I could do something like that. I'd give myself enough time for the trade to take place. And some of these actually are quite cheap because the price of Schlumberger has gone up. The implied volatility is down. And so some of the out of the money put options are very cheap. And this is one case where actually just trading a long option like this does make sense. If you're bearish, give yourself enough time for the signal to hit. And some of these longer term options are actually much more sensitive to changes in implied volatility. So you could do something simple like that. You could also set up what's called a debit spread. So you're buying this put option and you're offsetting the cost of that by selling this. This is called a vertical spread. So if I were to do this, I could trade this in the platform. This is called buying a vertical. And you can see that instead of buying this for $300 or whatever it's going to take to buy that put option, which is at the money, I can trade this basically for about half that, $1.59. If I'm lucky, if I get it midpoint fill. So this is one way that you can increase your probability of success is by using vertical spreads, which are limited risk. So the most I'm going to lose on that particular trade is what I invest into it, which is the same if I bought a long put option. So if you are super bearish on something, out of the money puts is a very aggressive, low probability way to trade it. So it may make sense for doing something like that with a Connors crash. But as you could see for the Workhorse example that we did have, that it did take a long time for this to turn and work out. And every day where the price is going higher, you're like, oh, I'm never going to do this again. So this is a very, very contrarian trade. It's going to fight every bone in your body to put on one of these trades because the trade is going to be very bullish up to that point. But again, the scan identifies something that's gone too far, too fast. Let's look at the scan really quickly. So I've just got this defined under Connors crash. And again, all this criteria is in Larry Connors' book. I've done nothing magic here. I've just applied it towards TD Ameritrade, Thinkorswim. So a minimum stock price is going to be $5. You don't want to be looking for bearish setups on something less than $5 a share. The average volume of the 21 period simple moving average is greater than 1 million shares, right? So you want this to be a very liquid asset. Historical volatility is greater than or equal to 0.8. So this is like massively, it's much larger. The volatility is much larger than it's used to. And that's very important as well, too, because markets that are about to break down usually attract a lot of attention, get very, very volatile before they do break. And then we're using the Connors RSI is greater than or equal to 90. So that's Larry's proprietary study, which just about every platform has got, or most people have access to whatever that is. Okay, so there's lots of different ways to trade this, but Again, I would recommend, if you're more interested in this, if you want the details on this, we do have a video on this on the platform about the exact criteria for taking one of these signals. Okay, and if you have any questions, please let me know on that one as well too. Now we get to our last one, which is the RSI Laguerre alert on the spiders or the GLD. That is the S&P 500 ETF or the gold ETF. So we're only scanning through 2 stocks for this short-term signal. I could turn this on for all 200 and you'd be miserable, right? You'd see more signals coming into the platform. You'd unsubscribe from it. You'd say, I can't take this anymore. There's almost such a thing as like too much of a good thing, right? So I'm only showing 2 stocks. And for those elite members that want to know more about this, you can create your own scan. I'll show you how to do that. And you can set this up against any watch list that you want to. So this is what it looks like. We have the daily chart on the left-hand side. We have the 60-minute chart on the right-hand side. And we're using these in a fractal setup. They're in conjunction with each other. What we're looking for is obviously an uptrend on the daily chart. We want to make sure it's got enough energy, first of all, and we want to ensure that it's in an uptrend. So I'm actually using not only the 200, but also a 21 period exponential moving average to ensure that there is an uptrend in place. And so you can see, like over the course of the last year, and this is only going back to November, but even just during November, most of the time, the price is above the 21 period moving average. That's what you would expect in an uptrend. We want to avoid these periods of time where we're in corrective, and it's just going to cause a lot of noise. You're going to have a lot of bad entries during that time. So if everything sets up good on this end of it, on the daily chart, then the logic passes over to the 60-minute chart and says, just find me a signal. And the signal in this case is this super sensitive RSI in Laguerre time. It's not a linear time series. It's a Laguerre time transform, which is very unique. It's very sensitive. And so you can get entries that are showing up like this without a whole lot of lag, which is nice. And so when this hooks back up again, this is where we get the signal fired into the platform. You don't see these very often. First of all, because it's only on 2 stocks. Secondly, because it's a very specific setup. Okay, so this is what the platform alert looks like. The SPY was added to, I think this one came last week, last Tuesday. That's the signal that we're looking at here. Like Tuesday or Wednesday is when it showed up. Okay, so this one was the SPY. Now the GLD has not showed a signal for some time because it's been in corrective. It's been actually pulling back quite a bit. So we don't chase after that. We're not going to open ourselves up to lousy signals. Are you guys aware that even in a bear market or a corrective market, most of the candles are green? So you can get some lousy signals coming up, some false breakouts that get swallowed back down again. You want to filter yourself out from those kind of things. So again, the scan produces very selective and infrequent results. Let's look at this one again. So again, we had the price above the 21 period, above the 200. We had enough energy at the time when this signal went off because we're measuring this almost like a fuel gauge where it's full or it's empty down here. Now, like today, right now, it's empty. Can't chase after this one. You don't want to chase after ones that are already exhausted. That's what the rest of the retail crowd does. And here's our signal right there. Here is our signal. Now, last week, 2 weeks ago, we didn't have a signal here because it's below the 200 or the 21 period moving average, which is transposed over to this time frame as well too. So that signal did not count, and we were spared of getting a crappy signal published into the room. So typically these are pretty accurate. Now, the hard part about this is you don't know when it's going to show up. It doesn't conveniently show up in the room at 9:30 in the morning when I'm going through the live trading room. Oftentimes it will show up late in the day, which are actually some of the better signals because, the amateurs open the market. If it shows up late in the day, the pros are closing the market. There's a better chance that it's going to stick into the next day. Let's look at the scan really briefly. Again, some parts of this are just not going to make any sense, but we'll go ahead and go through this. Okay. Let's load. See if I can find it here. I think that's it. Okay, so we're looking at a lot of different things. Again, I'm just scanning in. This watch list has only got 2 stocks in it. I want to see the price on the daily chart. So here's the daily aggregation. Price is above the 21 period. There is enough energy on the weekly chart, and there's enough energy on the daily chart to power the next trade. And then the last one here is the signal, which we're going to fire on the 60-minute chart. That is the timing signal on the 60-minute chart. Okay, so if I scan, there's not going to show anything. So this is not something that you want a manual scan. You want something where it's a dynamic watch list, always, always, always looking for the signal, always looking for the signal. And then when it shows up, bam, off you go. Next best thing to a trading bot. Okay, so that's the signals. How best to trade it? How best to trade it? Probably the best way that I like to trade this is through, again, a vertical spread. So if we're going to be trading something on the spiders, you could trade this through futures contract if you want to, and actually the micro E-minis are pretty good for that. It's not a whole lot of leverage. It's only $5 a point compared to $50 a point. I mean, even the old E-minis were pretty big, unless you had a big account. But on something like this, I'll use a very short time frame, and I'll typically use like a vertical spread for these. So I'll make these maybe about $1 wide, buy a vertical spread, and we're looking to get in for about $50. So we're only risking $50 per contract on a trade like this. And you can hold it for a few days. So I would typically trade something, not maybe necessarily tomorrow's expiration. I would probably trade it for the end of the week. So I would give it until the end of the week, but no longer than that. I don't want to hold these over the weekend. So if we do like a 9 April 406, 407 for about $50, that is very typical. So we're going to look for about a 50% return on something like that. Okay, that is... that's the material that I wanted to cover with you guys. So I do want to encourage you, if you're joining us just off of YouTube, if you want to join us on our platform, go to elite.readyset.trade. This is what you'll see. And it's quite simple. All you got to do is join up here. We're not going to spam you. We're not going to charge you for something. You don't need a credit card to sign up. So just go ahead and join us, and you'll get these signals that we've been talking about for free. Now, what to do with them, that's the different deal, right? That's where people that want to learn more have different ways to be able to trade something like this, and this is what we're all about. We are all about helping you build your own trading system. This is what we're here for. And that's what I do 5 days a week. No, 7 days a week. Never any time off, right? Okay, do you have any, is anybody out there have any questions? Is there anything that you want to see me cover separately to this or on the material? I'll wait a couple of minutes around. And if I don't see anything, I'll run. So I will shut up now for another minute or so here and see if there's anything else anybody wants to catch. If you're just joining us, welcome aboard. Or if you're watching this from a replay, hello as well. If there's any questions on the material that I just covered, please let me know. You can always email us at support@readyset.trade. And it will come right to me. Okay. Hey, John, thank you very much. Always good to see you in here. Okay, thanks, Vicky. All right, everybody. Well, nothing seen, so thanks for hanging out with me here today. And again, if you're a YouTube user, join us on the 10X Tribe. Join us on the 10X Tribe, or at the very least, hit that notification bell. Thanks, everybody. You guys be good. We will see you next week, or for those in the elite, I'll see you tomorrow morning. Take care, folks. Bye.